Hello everyone. So you're welcome to my practice session. This time around, it's not just going to be a practice session actually. What I plan to do right now is to enter for a pocket option tournament. So this is how you enter for it basically. In this down area, you see this trade, signal, social, express trading, and tournament, and you see pending trade. So you click on tournament. Now this is the tournament we're going for. It's called Day Off, and the price fund is $250. So participation is free actually. So all I need to do is just click join and confirm. Now these are the terms and conditions. One can easily read it, but I'll just click confirm participation, and that's it. So we continue to into the tournament trades right now. So when it opens, this is how it's gonna look initially, but first I'm gonna reconfigure this whole thing to what I prefer basically. So I'll choose this one. I'll choose this currency pairs AED CNY. Then I'll go into this area. I'll change it to candlesticks, enable timer, and disable this auto scroll so that it doesn't just scroll. Then I'll come to this time frame. I'll choose M1. Then in this trade time section, I'm going to choose M1 here, but I'm actually going to use the automatic one. So I'll click on this one, I'll switch to automatic, then click this time and choose M1. Then make sure that this last one is 00. So that's very important so that we can take trades with margin of safety if need be. So you can see the time right now is 8:15. So but the time on the trade time, so this current section candlestick will close on okay, it has moved right now, so the next one has opened. So we have this the last part of this one at 0, and this is just 1 minute basically, so we're good. Now we look for trades in the market. I immediately noticed that we have this doji, which the market did not respect it. Now this is what I'm going to do. I'm not going to sit through every trade because it's going to take a long time. So what I would do is I may speed past all those sections I did not actually take any trade, or if I need to explain, maybe I'll leave it a little bit to run. So but what I'm going to do right now is to just search for good trades. I'm going to go in with 25%. I will just keep stacking as we go like that. So I think I should I really want to go with the sellers right now because of this gap up, but I'm looking for more reasons to actually go with the sellers. I expect this candle to be a red candle, but I don't have enough reasons because sometimes you just have to combine your reasons. This pattern is retracement. It's called a 3-bar up pattern. Now we have a gap up also, which is a confirmation, but it's not enough. So let me just check this trend line and see. Okay, we may actually enter right over here. I probably would have entered above here if okay, we can we're not going to take any random trades. If I was expecting a gap up here, but since that did not happen, we're not taking the trade. Now I don't expect this market to respect this doji break. Let me even mark the doji with this. So if we have a doji disrespect here, we're going to take a doji disrespect trade. So I mean, if this candle breaks this doji range here, and we have another strong candle to the upside, so then the next candle after that will be to the upside also. But if that doesn't happen, then no problem, we're not going to take the trade. It's as simple as that. So let's see and wait. Let's wait and see if that happens. Yeah, this is a resistance area also, so I can see the sellers' activity. They are really pushing the price to the downside. So far so good. I've not seen any good opportunity. So let's just wait and see. But let's check other pairs and we'll come back to that. Now I'm not using my big screen, so all the analysis is going to be done on phone. Let's connect this trend line. Let's see how the market will react to this. So this is a price channel. Let me check that quickly. Okay. So there's a price channel here. Oops. Let's go back. Yeah, sorry about that. Okay, let me just connect this. Okay. I was kind of expecting to see doji disrespect here, but it didn't happen, so we'll keep looking for opportunities. The thing that is, if you don't see a very clear setup, then you don't take the trade. No matter how long it takes, you just don't take the trade. If the setup isn't clear enough, if you have multiple reasons to take your trade, no, you're not going to take it. Just keep looking, keep analyzing the market until you find a very clear trend or a very clear setup that you can actually, take the trade on. It's as simple as that, basically. So we had a point of decision here. You can see this market was a point of, then there's a doji here also. So the doji was disrespected here. You can see we had a doji break. This is doji here right now. So we have a doji break, then you can see we have a strong candle, then this is a doji disrespect trade. So we have another doji up here. You can see the doji got disrespected, then strong, you can see. So in two places actually, we have one here and we have one up here too. If I was in the market, I will wholeheartedly take this trade, this red candle. Good. So let's just keep searching. I keep checking this to see what will happen. But that ain't gonna happen there, so there's no point. We just keep searching for opportunities. We have a doji here. Let me check. Okay, good. The dojis are the area of interest in the market. So when we have this kind of uptrend going into that, guys, I'll be back, please. Just give me some minutes. Okay, guys, I'm back. I had to quickly sort a few things. So we're on this doji. Okay, we have a doji break and the doji disrespect. I'm expecting this one to be a green candle, but because of this gap up, we may not have the green candle again. So let's see if okay, the gap up actually worked. And also we have this uptrend, though this area is It's an area of interest in the market, so it's going to be interesting, but I'm not going to deal with this, so let's just move on. Let's look for a very good setup. Yes, we have a QM level here, so let's check this QM level quickly. If we can take a QM trade, this is the QM area. We have A, B, C to the downside and a push to the upside. So let's check M3 to see if we have an engulf. You can see we have an engulf here. That's good. That's first confirmation. So let's go to lower time frame along this side to see if we have a lower time frame entry. Okay, we have found one. I'm moving very fast because price is coming back down to this area. We need to take the trade as soon as price touches that area. So let's go back to M1, or let's check if we can fine tune that entry. Okay, that S15 entry was very good. S5, let's check S5. Okay, we have a final entry down here at S5. There's a better entry down here. Let's make that trade, save, and go back to M1. So as soon as it enters into this place, we'll take the trade, but I'm wondering why the color did not change here. After I saved it, okay, good. So we're waiting for the price to touch this area. This pink area. Once it touches it, we'll take it. If we enter the red zone also, we'll take it. We'll take another one. Okay, good. So that is first one. Second one here. So that will be our first trade and first and second trade for the day. So I'm expecting a push to the upside because of this QM area, and it's a nice QM area also. So I would explain this trade right after this happens. So basically this is what happens. We have this ABC to the downside. Now let me show you what ABC is. Basically this is what an ABC is. You see, when you have price movement, when the price comes down and goes up, then comes down again. Now this is what you call an ABC. After this, immediately price pushes to the upside again and breaks this previous swing. Then it becomes a QM level. It becomes a QM. Basically, and that's the reason why that's what we are trading right now. So at this area of the market, that'll be our green zone. And if price comes back to this area, especially under it, there will be somewhere along this area where we can actually take a trade. So the price comes back here, and it goes back up. It's as simple as that. Sorry, my drawing may be messy, but I hope you guys understand. So let's go back to this. Let's go back to the chart now. For example, we have this. So the way it is now, we have this A. Let's draw it properly. So we have this A, B, C to the downside. Then all of a sudden, the price went up. Now it broke this previous swing. You can see right now. Now if price comes back, this area now is going to be our green zone. And if price comes back to this area now, we're expecting a rejection. So we'll take this trade. So let me clear all this. So this will be our trade right there. So that's what you call a QM. QM. So let's look for more opportunities